Good evening, and welcome to this special Sphere webinar, Taxation and Democracy. I'm Alan Carey, the Director of Sphere Education Initiatives, and I'm so excited to be here with all of you tonight. First of all, let me begin by thanking all of you teachers and all of you educators for joining us this evening, particularly at the end of what has been a long and I'm sure in many ways challenging school year. Very excited about our conversation tonight and our guests. We're thrilled to be joined by two fantastic experts on tax policy. We'll be having a conversation to learn a little bit more about how to think about tax policy and the impact it has on democracy, but also join with an expert to talk a little bit about how to think about bringing taxation into the conversation in your classroom, how you can use these fantastic resources and tools from TaxEDU to begin to help shape these ideas and conversations for your students. Before we begin tonight, a couple of quick reminders for all of you joining us this evening. If you are joining us here in person online, please make sure that your Zoom name reflects your actual name, what you registered with, so that we can go ahead and make sure to send you a professional development certificate after the event. Also, like all Sphere events, we want to be as engaging in conversation as possible. So if you have questions along the way, please, by all means, put them in chat. We'll be capturing those and asking those of our panelists as we go throughout the conversation tonight. So with that, it's my pleasure to introduce our guest this evening. First, we're joined by Nico Luciani. Nico is the Director of Corporate Power at the Roosevelt Institute, where he leads the think tank's program to dissect and dismantle the ways in which extractive corporate behavior jeopardizes workers, consumers, our natural environment, and our shared economic systems. Luciani develops cutting-edge research exploring the mechanisms by and extent to which firms, executives, and shareholders have gained, retained, and wield outsized power in our economy and politics, while also teeing up policies to promote shared prosperity and reclaim power for workers and the public by curbing corporate power. Luciani brings to Roosevelt over 15 years of research and advocacy, lifting up alternative economic policies which uphold people's human rights in the US and around the world. At Oxfam, he played a key role in defining the agency's economic inequality research agenda, especially knitting together different strands on corporate tax, corporate governance, as well as racial, gender, and economic inequalities. He also led the organization's engagement in and around the pharmaceutical sector before and during COVID-19. Before Oxfam, Luciani directed the economic policy program at the Center for Economic and Social Rights, managing cross-jurisdictional investigative projects on various economic policy areas, especially on the use of economic rights as a framework for public financing alternatives to fiscal consolidation and austerity. A frequent contributor to debates on tax, corporate governance, and economic inequality, Luciani's work has been widely featured in the Financial Times, The Washington Post, NPR, Newsweek, Vice, and LA Times. Luciani's most recent publication exposed how the shareholder-first business model, typifying today's U.S. corporations, left our economy exposed to a thoroughly unequal winner-takes-all pandemic. Luciani was raised in Northern California by his amazing bilingual public school teacher mother. He speaks Spanish and French fluently and holds a master's degree from Columbia University School of International and Public Affairs. Thank you so much, Nico, for joining us tonight. Also joining Nico and I in conversation is Alex Merceno, a federal analyst at the Tax Foundation, after previously working at the federal team as an intern in the summer of 2018 as a research assistant in the summer of 2020. He attended Tufts University, graduating with a degree in economics and minors in finance, political science in February of 2021. He also worked for the Pioneer Institute in 2019, and the summer as a journalism intern at Reason magazine, and has written op-eds for various print and online publications. Alex originally hails from outside Boston and enjoys Dungeons and Dragons, 80s movies like Back to the Future, Indiana Jones, the Schwarzenegger filmography, and Die Hard, which I would note is one of the greatest films of all time, and classic rock. Alex, thank you so much for joining us tonight. Nico, Alex, thank you guys so much. Really excited about this conversation. To begin with, what I wanted to do is step back, right? So with tax policy, we're often thinking about conversations like, well, it's tax time, what comes out of your paychecks, what you're paying, are you going to get a refund? But instead step back and think about the conversation at a much higher level. And that is thinking about it in terms of what's the role that tax policy plays in a democracy in general? That is, what ought it play? As opposed to thinking about the sort of dollars and cents and versions of the conversation that we typically have. Nico, let me turn it over to you. I'd love to get your thoughts as we think more broadly, what ought the role of taxation be in society?
Thanks so much, Alan, and to Karen and all the other organizers, and gratitude also to the teachers and educators. School is really a critical venue for instilling, the type of civic values and perspectives that we need, especially today. So Alan kindly mentioned it. I come from a family of teachers. My sister is a teacher, my aunt's a teacher, my brother-in-law is a teacher, my mother is a retired teacher. My father went into law, but he regrets it and said he should have taught. So I'm very much schooled in the way of the challenges and rewards of being a teacher. And so it wasn't a little bit till later in life that I actually started to think about how my professional world around economic policy and taxation actually connects very closely to the experience of my mother and the experience maybe of other educators like yourselves. And, so as I go through this, I really want to reflect also on the experiences of teachers, and would love to have a conversation, some questions about that. So starting with the question that Alan asked, what is tax policy really for when we step back a little bit, and especially from a sort of educators and students perspective? I think the best way to think about this is something we call the 4 R's of taxation. The first one is about revenue, right? It's most basic. It's about raising funds from people that are able to pay, and then allowing that to fund critical public services that we all enjoy, that fund education, our road systems, our police, our firefighters, our national security, all of these things which we all need and benefit from. And not only that our economy grows as a result of. And so the first side of revenue, more directly in the education space, is of course public funding of teachers, both at state level, municipal level, like property taxes, and some at the federal level in certain circumstances. And just reflecting my mom's experience, she was in one of those schools that was very underfunded because it was in a relatively underserved neighborhood, not a lot of property taxes in that area. She was one of those teachers that had to cut out of her own paycheck, of her own somewhat humble paycheck, to be able to buy some of the materials for the kids that they needed. And my experience there just said that we need some more revenue for teachers, not only for materials in schools, but also for the teachers themselves. So tax policy has a really important aspect of raising revenue, which is good for teachers, good for students, but also good for our economy more generally. The second R has to do with redistribution. That is to say, any of us could fall in hard luck tomorrow. We have a tax system and generally a public finance system that will help people that fall on difficult luck. And then when you're back on your feet and doing well, you feed back into that system. And that's a way where an economy that might trend toward inequality can become more equal over time. The third R is with regard to repricing or regulation. I know regulation is a bad word in some circles, but here I'm essentially talking about incentivizing good things and disincentivizing bad things, right? And so if you think about tobacco taxes, which are a form of an excise tax, which funds something that we don't think is good for public health reasons, that taxes things that are not good for public health reasons, namely smoking cigarettes, and then funnels that back into things we think are good. And in my mother's case, once there was a tobacco tax that was put into place directly earmarked for schools, she saw a big bump in the public funding that was available for her students in her school district. There are other forms of this, of excise taxes, which help to shape the type of behavior in our economy we want. And some of those can be very stimulative, can make our economy very vibrant. If you think about innovations in research and development as a form of this, or investments in future potential like higher ed subsidies or tax breaks. This is a kind of the repricing or regulatory role of taxation. And then finally, this really cuts into the question of tax and democracy, which is the fourth R, which is representation, right? Tax paying, in my perspective, is a civic act and a civic duty that shapes our relationship to our government. It's really sort of a financial embodiment of us all being in this together, that we all feed into a system and we all benefit from the system. That's how it is in theory. Now we can talk about whether that's the case in practice, but From a values perspective, this is a fundamental role of taxation. We can go way back to the very beginning of the American Revolution. We can talk about that if we want. Thomas Paine, who wrote Common Sense and Rights of Man, and if any history teachers in the crowd know this, he was really centered on the question of the power of very large landowners and monarchs in the early American colonies. And when we had a new government of our own, the key thing was to tax the wealth at the very top to make sure we would never have monarchs again in this country, so that everyone had equal opportunity. And in that sense, he thought that was a really important safeguard of our representative government. So I think I'll just hand the mic back to Alan. I really appreciate the opportunity and look forward to the discussion.
Thanks, Nico. I think that was great. It really gave us a really interesting perspective on how to think about tax policy, but not from the sort of percentages and brackets point of view, but from the what do we want it to try and accomplish and what are some ways to think about it. Alex, I'd love to get your thoughts on that as well. I know you've got some interesting perspectives that I think will differ some from the way that Nico's approached it. From your point of view, how should we be thinking about the role of taxation in society?
Yeah, so thank you all for being here, both participants, teachers, as well as Alan and Nico. Good to have you. Good to be here myself. I guess funny that you bring up the beginning of the American Revolution. I grew up in Concord, Massachusetts. So we in Concord say that Concord is the site of the shot heard around the world, not Lexington. For Lexington was where a shot was fired, but Concord was when the colonials fired back. And so we say that's where the shot heard around the world is from. But of course, anyways, relevance to the conversation, of course, is the taxation without representation being the early slogan of the Patriots of Boston. So I definitely have some common ground and some sort of divergences with Nico's perspective. I think the first I think is sort of the core to me is revenue. Taxes are fundamentally, okay, the government needs to do things. The government has a set of things it needs to accomplish. Okay, how are you going to fund that? And taxes are the predominant way you're going to raise revenue. And the sort of goal of tax policy is to do that in the sort of least painful way possible. That can sort of both cover growth concerns, that you want to do what you want to create a tax system that that has the sort of smallest impact on economic growth and activity. That's sort of one way of saying that. There's a Jean-Baptiste Colbert was a public finance minister for, I believe, Louis XIV. I would not say that Louis XIV is perhaps a model of good governance, but this sort of particular quote is quite apt. That he said the taxation is the art of plucking the maximum number of feathers from the goose with the minimum amount of hissing. So one form of hissing is reduced economic growth. And so you might want to design a tax system that minimizes impact on economic growth and prosperity. And then the alternate form of hissing is, of course, distributional concerns, that you want to make sure that your tax system doesn't disproportionately burden sort of lower income households, people who have a harder time making ends meet, that you don't want to burden them too much either, because that inflicts sort of a different form of harm. So I think that's sort of the core of the principles of taxation at a sort of 100,000 foot view. How high do airplanes fly? Something like that. I don't know. And 30,000 feet, I think. Let's go with that. And then I think, as far as distribution goes, I think that there is part of that can be done through the tax system, but part of that I think is also something that's accomplished as part of the menu of government services that you would like to provide, I think. So this is a common sort of back and forth of how you think about distribution is what are you using the money for, as well as how are you taxing. So if you have a very flat tax system that sort of, the US is a fairly progressive tax system, especially at the federal level, where higher income earners, for the most part, pay much higher marginal and effective tax rates. If we had a flat system where everybody just pays a 20% income tax, but that is paired with a very sort of progressive distribution of benefits that is very focused on low income earners, you end up at roughly the same place as you do with, say, a progressive structured system and a sort of relatively minimal set of benefits. So I think that is,
Alex, not to cut you off, but I think you get precisely into my next question. So let me frame that and let you continue, which is how are we doing relative to the role of taxation in society? So as you're starting to talk about thinking about effective tax systems versus marginal systems, and thinking about flat taxes versus progressive or regressive taxes, that gets us into the conversation I think is a neat one, which is to say, from the point of view of our system as it's lived right now, how are we doing? That is, how does our system match what you might say is the role of taxation in society as a whole? Where's it doing well and where's it doing poorly?
Me or start?
Yeah, Alex, go ahead. I interrupted you, so I'll let you keep going.
Okay, sure. Geez, that's a pretty. I'm trying to remember the context, but somebody recently said, "Well, compared to what?" as a response to some rhetorical question, and I think that is an important question to ask as well when it comes to evaluating the state of the tax system. Is who are we talking about? So I think, actually to answer a question in the chat partially, I think there are some countries that have a very sort of simply structured tax system that the US looks kind of well like a mess next to. I think we at the Tax Foundation tend to be a big fan of the Estonian model, which has a very sort of simple, flatter tax with very few deductions. The corporate tax is based on cash flow, which is a sort of details that we may or may not end up getting into. But in other ways, I think it's gotten better, especially on the individual income tax side over time, where we've moved away from sort of very high marginal tax rates with sort of very broad deductions as well. And I think we've moved away from having so many deductions, but using sort of lower marginal tax rates. So I think that's been an improvement. But there is, still enormous amount of complexity. And I think one way we've moved in sort of the wrong direction, and this is, partly a matter of taste, but also I think partly a principle thing, is that we've moved towards using the tax code as an administration for all kinds of sort of social programs, programs that might be, good, but could be better administered through other mechanisms like the child tax credit expansions and the stimulus checks were all sort of administered through the IRS. And I think moving towards a system where, those types of programs might make more sense to be sort of conventional benefit programs, like say Social Security is. So I think that's somewhere we've moved in the wrong direction, but in other ways, I think we've improved, especially sort of fewer deductions and lower rates, especially on the individual income tax side.
Nico, I'd love to get your thoughts on the same question. I know the tax changes passed under the last administration have been popular in some quarters, have been considered particularly problematic in others, whether it's thinking about those policy implications or just more generally how the current tax code matches up against some of the 4Rs that you discussed. How are we doing?
Yeah, well, a report card on the state of taxation in the United States. I'm afraid I'm a little less sanguine than Alex, perhaps. I think on the revenue side, it might be surprising to folks because, it seems like we pay a lot of taxes. But if you look at the economy as a whole, we pay much, much less in tax than most of other advanced countries. If you look at the OECD countries, or just the advanced countries of the world, we're way down at 32 or 34 of 35 countries. We're not raising enough revenue, and not enough of that revenue is going into public education, in my particular view. So I would give, on the revenue side, I would give it a C at best. And that's a longstanding thing. The tax changes of late 2017 made the problem worse, but it's been a longstanding issue for several, 3 or 4 decades. On the redistribution side, we're not doing much better. The federal government actually is better at redistributing than states. States are terrible at this. And so overall, there may be a progressive system, meaning that the poor more, the rich pay more than the poorest proportion of their income. But if you look at it at the state level, it's really quite regressive in several states in particular, which I won't point fingers, but so I think that's probably a B- depending on where you live. On the question of taxes reshaping behavior, I mean, taxes reshape behavior all the time, everywhere. I think there's a lot we can do, in particular on taxing carbon emissions. We have climate change, it's very real. And the best way that all economists say is to actually just put a price tag on that. We're not doing that, we failed doing that, and it's gonna cost our children and our grandchildren dearly. And then on representation, I think our tax system is riddled with holes, riddled with loopholes and ways for the richest among us to get out of paying any effective tax whatsoever. If you look at anyone from Elon Musk to any of the biggest corporations, they're paying very, very little in tax and getting away with it because of the way the rules are written, but also the way that the rules are not enforced. So on kind of the fairness and feeling of people's trust in the tax system, it's probably a C or C-, unfortunately. But there are ways to improve all of these things, which we can go into if you'd like. But yeah, at this point, it's not great. Could be worse, but could be much better.
So one thing the three of us talked a little bit about when we were getting ready for the conversation, and I think each of you have brought it up in different ways, is thinking about the way in which taxation is often, particularly of late, a vehicle for shaping policy in other areas. That is to say, so often tax policy is the driving force, or whether that's the carrot or the stick, in shaping the way that governmental actors are trying to encourage certain kinds of behaviors. You'd mentioned Elon Musk. I think a great example is the way in which the tax code currently is set up to encourage individuals to purchase electric vehicles, right? With the tax credits that exist there, good or bad, that's one mechanism that's used in the system. Similarly, we see that with the way in which we treat tuition, right? So you pay for college, you take out loans for it, you get credits for doing that, right? We encourage certain kinds of behavior through tax policy, both on the individual level and on the business level. So I guess the question that I have for both of you, and feel free to jump in, whoever would like to tackle this one first, is thinking about what are some of the ways that people may not understand how tax policy shapes policy more generally? That is to say, what are some areas in which government at the federal level uses tax policy as a mechanism to encourage or discourage behavior on the part of individuals or businesses that most people, or particularly teachers or students, just might not be aware of?
Yeah, I can jump in and love to hear from Alex also. There's so many ways that this happens almost invisibly that people don't really see. And I'll just give an example again from my mother's experience. In 1978, the state of California, where I grew up and where my mother teaches, passed Proposition 13, which was essentially a property tax diminution or reduction in property taxes, which was popular because a lot of homeowners felt that it was getting too expensive. Now, anyone that knows California, is increasingly expensive to own a home. But people didn't realize at the time when they passed it that students were going to pay the cost of that. That one of the reasons why we have underfunded schools across the state is because we haven't had the kind of funding that's adequate through the property tax code. So that's one example of a way that students and teachers have been affected by a tax policy that maybe was driven, was sold in particular ways, but maybe not, didn't lead to those right conclusions. And there are many more. We could be here for 3 hours to talk about all of the different ways that tax shapes goods and bads in our economy.
Yeah, no, I think I have a favorite article that someone wrote a couple of years ago about how tax policy created White Claw seltzers, with the idea that because beer and wine is taxed differently from spirits, seltzers are basically a vodka soda, but vodka and a vodka soda is taxed like a spirit instead of like a beer. White Claw is taxed like a beer, so effectively the sort of tax price of a vodka soda, i.e. a White Claw, is lower than just making a vodka soda. So it's sort of that is a sort of fun, weird example. A sort of more concrete one is, I guess, one of the issues about sort of using tax policy to shape behavior is determining what the baseline for, like, oh, well, this is a normal tax system. And then we sort of layer things on to try and influence behavior beyond that. I think sort of some things I would say would be an improvement on the way the system works right now, because I think it penalizes certain things. And if I say I want to incentivize something, I really mean I want to reduce the disincentive of it. One of those things is physical capital investment. So the way the corporate tax works for the most part is when you're a company, you deduct the cost. So corporate income tax is fundamentally a tax on profits, or revenues minus costs. This is very simple, but what are costs and when do you incur them? This is more complicated. Usually for your daily expenses, your wages, your supplies, you buy a bunch of Post-it notes for the office, your energy bill, those are deducted immediately. But when you have a big capital investment, which is to say you build a building or you have new machinery, new computers, those welding robots that you see in modern car factories, those you usually have to spread out. And that's because usually that's for the sort of income statement purposes, to show basically to shareholders that you're not losing money out here, that if you buy a ton of new physical plant to build more cars or whatnot, that you're not just losing money hand over fist, that you're investing in a new project. But transferring that to the tax system is kind of a problem, because when you spread those deductions out over time, which is what you do to demonstrate to the shareholders that, look, this is not, we're not just spending money, we're not just throwing money away, we're investing in new production. So we're going to spread it out over the amount of time we're going to use this new factory. But the problem with using that same rule for the tax system is that it creates a tax penalty on this type of investment, because inflation and the time value of money, which is a econ concept that basically says, you could, if you have $100 now, you could do something with it that would make it worth, $103 in the future. You could put it in the stock market or something, and that's your expected return. So money is worth the same amount of money is worth less to you in the future than it is now. So spreading those deductions out creates a tax penalty against that investment today. And this has sort of big macro and micro consequences, I think. On the one hand, it disincentivizes investment broadly, which has negative consequences for growth. Wages in the long term are driven by productivity growth. And then also in specific industries. So if you are more reliant on costs that are on capital costs, big factories, buildings, et cetera, you don't get to deduct the full value of those. But a company that is more reliant on salaries and less on these sort of physical stuff, they can deduct a lot more of their costs. I guess two examples you could use are, think about like an investment bank that has like a ton of very highly salaried workers versus, say, a Ford or a a power plant or something that is mostly this sort of big heavy machinery takes up a larger portion of the cost. So if one type of cost can be fully deducted and another can't, that creates sort of a bias against manufacturers, creates a bias against sort of new energy efficient technology, because again, capital costs not fully deductible, but yearly energy costs fully deductible. So that sort of creates a big sort of broad set of problems across the economy. So I think that's a big way where tax policy sort of unfortunately disincentivizes a certain type of behavior that we would like to encourage.
Thank you, Alex. Nico. So I do want to get to some of the questions that we've started to get in the chat. And for the people joining us here tonight, I do want to encourage you, please add more of those questions in the chat for Nico and Alex. There's lots that we're not going to be able to cover, but we'll make sure to get to what makes the most sense from you guys. Melissa Boyd asked a question that I think is a common confusion. I know it's one that I run into all of the time when I'm trying to think through some of these distinctions and policy conversations, which is, what's the difference between when we talk about a marginal tax rate and effective tax rate, particularly when it comes to things like thinking about the taxes that wealthy individuals or high income individuals earn in society and the tax rates that they pay. I don't know if one of you guys want to take a quick stab at explaining the distinction there.
Sure, yeah. So when you pay your taxes, so there's a different sort of brackets of your income are subject to different tax rates, and those tax rates sort of go up as you go. And so I guess as sort of let's say that you earn $50,001 and income from between $0 and $50,000 is taxed at a 10% rate, and income between $50,000 and $100,000 is taxed at a 20% rate. So you pay $5,000, you owe $5,000 of taxes on the first $50,000 of your income. And then on the final dollar, you owe 20 cents. So your marginal tax rate is 20%. But your effective tax rate is 10 point some very, very small number that I don't really feel like calculating off the top of my head. So that is the sort of core distinction between an average tax rate and a marginal tax rate. And so I think I'll hand it over to Nico if he'd like to make any sort of more elaborations there.
Yeah, I mean, that's the basics, but I think what's important in sort of practice for the very wealthy in particular to understand is that there is no, well, let me put it this way. The only real tax on wealth is the property tax that middle class people pay primarily, right? At the upper end of the echelon, we're talking about, Musk or Bezos or Gates or any of these guys. They choose what income they want to report to the IRS because they're making most of their money in wealth and capital gains through their companies. And as a result, they can get away with an effective tax rate of essentially zero, because in Bezos's instance, and this is something that's been proven because there was a treasure trove of tax returns that was shared, and ProPublica was able to look through it and find these results. Essentially, what Musk did for a couple of different years was his only income was borrowing off of his stock options in Tesla, and because it was a loan, he didn't have to pay any taxes on it, and that was the income he lived on, and he paid himself, I think, $1 in income or something. And so as a result, his marginal tax rate was very small, but more importantly, his effective tax rate was next to zero. And in the corporate side, this is very important because there are several large companies on any given year that will have an effective tax rate of 0 to 5%, whereas they're supposed to be paying at the statutory rate of 21%. So that distinction is really important. What it says on the books and what people and companies are actually paying are two very different things. So effective just means what they're effectively paying in real life, not what they're supposed to pay, but what they are paying.
Yeah, and I would say a couple of sort of responses to that. I mean, this goes back to the core question of, well, what is income? And so there are some perspectives on taxation that says unrealized gains are income and should be counted the same way salaries are. But if you look at just realized gains, that looks like a different picture. I mean, then you have to consider everyone's unrealized gains. If you have your home appreciates from in a given year, is that also income? So that creates some difficulties on cross comparisons, I think. But also with companies, a lot of times it's, as I mentioned before in the discussion of expensing and how capital investment is treated, it's a question of which definitions of income you're thinking about. So if you look at the income statement, which allows, which forces sort of a capital investment to be spread out, that says one thing, but we really don't, using the accounting, I guess that's the important thing. What is good accounting is not always good economics. And so the system the accountants like to make sure that all the revenues are matched up with all the costs in the same year or whatnot, to make sure that works, that would create sort of significant disincentives for investment if applied in a sort of tax and econ way of thinking. And so a lot of times the companies that aren't paying any taxes in a given year, like I think Amazon in 2018 was a big example, it was because they had done an enormous amount of capital investment that year. And so that's not always the case. There are cases where companies are sort of, exploiting things that are not reflective of real activity, but that's sort of a common sort of below the line discussion, pardon the tax pun. And sort of the sort of small print, I guess, is that a lot of times it's because those companies are doing major capital projects in a given year. And that's something we want to encourage. We want companies to invest in the United States. Yeah.
So we got a question in from Mark Robinson that talks a little bit about Social Security as a redistribution program, where in many ways, as he puts it, we think about it as a mechanism that transfers money from the young to the old, right? Those in their retirement years, regardless of sort of wealth or poverty of the individuals involved on either end of the distribution mechanism. So Mark goes on to ask, is this really what we want in redistribution? So let me pose the question to both of you. I think this is sort of concrete way to think about tax policy and some of the challenges of how the system works. Given the way that you think about the system, the way that you think about the role of taxation in society, is something like how Social Security is set up now something that is good, or perhaps good but needs some help, or something that is problematic as a mechanism for utilizing tax policy to achieve social ends? Nico, why don't you take a first stab, and then Alex, I'd love to have your thoughts on that one as well.
Sure. I mean, as a general sense, I think of this Social Security as one of the most successful programs in ending older age poverty that we've had in the country's history. Before Social Security, once you couldn't work anymore and you didn't have any family to take care of it, you're completely destitute, right? And so I think just important to step back and say this was a very successful program. And I actually don't think of it as a redistributive mechanism in the ways that others are, because essentially Social Security, in my view, you feed into it the rest of your life for your whole working life, and then you take from that fund and it helps you later in life. And so I can understand, Mark, you say it transfers money from the young to the old because the young are paying at the time that the old are taking the money out, but actually the older people, once they come onto Social Security, they've put in so much money over the years. That's the basis of your Social Security check, not what the young are paying now, if that makes sense. So if it was strictly a redistribution from young to old, I don't think it would be a very successful program and wouldn't have been as politically or economically palatable as it's been over these years. So I think it's actually just it's a trust fund for those of us that are in our working age to be able to have a guaranteed return and something to fall back on once we retire. And I know for a lot of seniors and fixed incomes, it's a godsend. I mean, if you didn't have that, and the markets as they are right now, relying on an IRA might not be the best option. So I actually think we need to expand on Social Security to include more public options for retirement accounts. That's another conversation, but yeah.
Alex, real quick, your thoughts on the question.
Yeah, I think I guess I'd say I'm of two minds on Social Security. I think on the one hand, I think I agree with what Nico said at the beginning of when you thought to think about where we were before Social Security in terms of the sort of poverty among the elderly was quite horrific. And I think that it's a been a very successful program on that metric. It's also quite the administrative costs of Social Security, I think, are pretty low relative to benefits distributed, which is at the very least a model for other programs to consider that what administratively makes Social Security work quite well. I think the concern now is that we're in a different place than we were in the 1930s. People live longer. There are fewer sort of manual jobs, so that careers can be a little bit can be sort of more feasibly longer. And then I think broadly, instead of the elderly being a sort of most destitute members of society, which is where we were before Social Security, now in aggregate they tend to be wealthier than average. So I think that it might be worth considering sort of how, I guess, when you look at the composition of the US safety net relative to most other developed countries, it's less focused on younger people than most other social safety nets. So I think that it might be worth considering sort of if we're taxing this much to put into Social Security, we're putting this much into Social Security, maybe we should think about prioritizing a little bit more towards support for kids and paid family leave or something like that. Those sorts of programs in terms of the sort of distribution of how the U.S. welfare system distributes money.
So final question that I have for you both, Alex and Nico, and Alex, I'll ask you to go first, and then Nico, I'll give you final thoughts on this one. If there's one thing that you could encourage educators to bring back to their students to know about tax policy, that is one thing that you would say, given where they are in their lives, they're 15, 16, 17 years old, what is something that if they could know now, you would say this will put them in a better spot as they're going forward? What's your takeaway advice for educators? You go back and you talk to your kids, here's something for them to remember and think about. Alex, you first, and then Nico, I'd love to get your thoughts.
I guess I would say this is something I'm shocked at myself that I haven't mentioned, is the idea of tax incidence, which is to say the person who physically pays the tax is not always the person who actually bears its costs. And this is something that is sort of difficult or is sort of easy to get lost in. But basically, the businesses tend to, actually send sales tax revenue, to the government, but you are the one who bears the economic burden of sales taxes, you the consumer. Corporate income taxes are, paid by corporations, but the sort of burden of corporate income taxes is typically split between shareholders and workers, because corporate income taxes have a disincentive effect on investment, and that lowers productivity in the long run. Now, the exact distribution of how much is put on labor and how much of it is put on shareholders is a very contentious issue. But carbon taxes, which I tend to like, or would generally fall on emitters legally, they would be the ones in charge of sending the money, but the economic impact would end up being sort of more spread out across the country as taxes would raise energy prices or whatever. And so I guess that the person who pays the or tariffs, people often talk about, that we're taxing China or Europe with these tariffs, but that it's not always the companies themselves that are really paying them. It's U.S. consumers, and so I guess the big thing is that the person who pays the tax to the government is not always the person bearing all its economic costs.
Excellent, Alex. Thank you so much. Nico, final thoughts. What would you leave our teachers with?
Yeah, I mean, maybe a story that might break through with the students also, probably a strange one, but a little bit of folk wisdom. Charles Barkley, you may know, NBA player. He was given a story the other day. He said, I was later in my career, I was making a lot of money and I was complaining a lot about having to pay all these taxes, and he got a call from Bill Russell, the famous Celtics center, who said, look, Chuck, when you were a kid, you had police in your neighborhood, right? You went to a public school, you had teachers teaching you, right? You had firefighters, okay, and you went to a public higher education system that was paid for. Those are all paid for taxes. Now that you're making a little bit of money, all at least you can do is give back, right? And that to me is so essential about what tax is about. It's this physical embodiment of what we owe to one another as citizens in our democracy. It's not just getting money here and sending money there. It's really, again, kind of the financial manifestation of our citizenship. And I hope people can take that away and bring that back to their classes.
Nico, Alex, thank you both so much for joining us for the conversation tonight. That's been fantastically enlightening. Really appreciate you guys joining us. Up next, I'm really excited to be able to turn it over to our friend Zoe Calloway from Tax Foundation, where she runs TaxEDU. My pleasure to introduce her now and then let her spend a little bit of time talking to all of you about how you can start to think about these resources for your use in the classroom in your school. So Zoe is the manager of education and outreach at Tax Foundation. She was previously executive director of an issue advocacy organization that advocated for lower taxes, mindful state spending, and better accountability and transparency in government in her home state of Delaware. Prior to that, she worked in the Delaware State Legislature as a communications specialist while completing an MA in Urban Affairs and Public Policy at the University of Delaware, where she also earned a BA in American History with a minor in Political Science. Zoe's hobbies include painting, reading, piano, writing, and exploring new places. Zoe, with that, it's my pleasure to turn it over to you. Please take it away.
Thank you, and thank you for having me. I first of all want to thank all the educators for taking the time tonight to join us. I know that you have a long day in the classroom, and it's really great to see so many of you here, not to just further your own learning, but also to get additional resources for your students. I think both are admirable things to pursue. So I'm happy that you got to have first two experts talk to you about a very complicated topic and one that's honestly not touched on enough. And then to stay on for me as well to be able to provide you with some resources for your classroom. And then also I'm hoping some that if you were left with questions from tonight's discussion, we hopefully have some materials for you as well to dive deeper with some of the questions that you may have remaining from that. So with that, I'm going to go ahead and share my screen at this point and get right into the professional development. I won't keep you longer than necessary. So give me just a second and I will go ahead and share this. All right. So as Alan mentioned, I represent TaxEDU, which is the educational platform of Tax Foundation. We started this about a year ago. It started a little bit before that as a smaller landing page on the website, Tax Basics, and then we decided to expand it because honestly, as I'm sure many of you know since you're here this evening, tax literacy and financial literacy broadly is pretty low across the board and something that we're looking to work on and to boost to the best of our ability. So that's kind of why we started, but let me go through why this is important for your students. I want you to feel like you're taking something away that's worthwhile. So I'm sure many of you have heard that financial literacy is growing. There are states passing measures now that are mandating financial literacy be part of curriculums. So it's good that there are some organizations filling in these gaps ahead of that happening, but also it's something that should just be discussed as prepping your students for becoming good, active, and knowledgeable citizens. As they grow up, they start working, they start saving, and they go out into the real world. So when we're talking about financial literacy, something that I personally noticed back when I was studying to be a high school teacher myself, and then also as I've started working in this position, is that taxes are simply not talked about enough. And however, they're a massive part of your daily life, whether you realize it or not. And that really starts when you're about in high school, when you get your first paycheck and you think, where did all my money go? It would be really helpful for students to kind of have, that base level knowledge, those building blocks for them to be able to better understand taxes at the base level, and then to be able to grow on that knowledge as they learn about tax policy as they continue to, progress into adulthood. And as educators, you know that those building blocks are crucially important for students to be able to understand and to continue to learn about anything. Tax policy is no different, especially since it can be a little bit complicated. So that's where TaxEDU comes in. That's why I'm speaking to you tonight. We combine the best aspects of various educational platforms. So we have a couple different things that we offer, which I'll get into in just a minute. But our audience is pretty broad just because that's the nature of what the populace understands about tax policy. It's pretty low across the board, so our audience is pretty broad. We have high school students and educators, start them young, moving into college students and professors, lawmakers and legislative staff, because we believe in promoting better and more sound tax policy, and then as well for the average taxpayer. So I hope that some of these resources can be useful for you as well after this presentation for your own further learning. So first, I would really like to get into what our best offering is for high school teachers. Again, I studied to be a high school teacher. I didn't pursue it. I give you guys a lot of props for continuing with it, and I understand how much work it takes. And so that's why we built comprehensive lessons and continue to build comprehensive lessons. So you don't have to take that extra step to piece all these things together from all over the internet. You can come to this landing page on our website, and we have everything that you need built to Common Core standards to plug right into your classroom. So when you go to build a lesson, I would really like to point out our most robust offering that we have currently, which is the 3 basic tax types. That's also the perfect place to start with high school students, introducing them to taxes, how they impact their daily life, and how they kind of work in the different aspects that you could address it in. So this lesson would include a primer, which is available for download for free, a lesson plan for you to utilize as well, free to download, an assessment and an assessment key, as well as a video that you can show in class, which is a brief explainer video, which I'll be showing you in just a second, so you can get a taste for what that would look like for your students. So this is something that we're looking to build. We have 7 primers. We will eventually have lesson plans for all 7 primers. So check back if this is something that you like and there's more information that you're interested in. We're always updating material, and that's always available for free for educators to use. And it will always remain free for educators to use. So this here is the explainer video. I'm just going to go ahead and play it real quick for you guys to understand kind of what our explainer videos have to offer. This is one of a few that we have, and we release 4 every year.
One of the first lessons you learn about money as a kid is that the price on the tag may not be the same as the price on the receipt. Why? Taxes. Taxes have a much bigger impact on our lives beyond just paying a little more for the things we buy. And the better you understand them, the better equipped you are to make decisions about them. All taxes can be divided into 3 basic types: taxes on what you buy, taxes on what you earn, and taxes on what you own. Every dollar you pay in taxes starts as a dollar earned as income. The main difference is the point of collection. Sales taxes are paid by the consumer when buying most goods and services. These taxes provide state and local revenue, funding services like education, transportation, and healthcare. The individual income tax is a tax paid on many sources of income you might earn, like the taxes taken directly from your paycheck. Income taxes are major sources of revenue for the federal government and many state governments. The third type of taxes are taxes on what you own, like homes, land, or vehicles, known as property taxes. Property taxes generate revenue at a local level. They provide funding for everything from parks to public safety services to additional funding for schools. Every dollar you pay in taxes affects how much of your income you get to keep, save, and spend. So understanding each tax type can help you make better decisions about everything from which job to take, to where to live, to how you vote. To learn more about the 3 basic tax types, go to taxfoundation.org/taxedu.
All right, so just a second on my end. Sorry about that. So that's just an example of what we have to offer with our videos. Again, we do release them periodically, and they are built with the understanding that this is primarily going to be an educational resource. So we do really try to tap into that building block mentality where a student is not going to be able to really process this information if we're not connecting it to them in a personal and interesting way. So we're hoping to achieve that with these types of materials. If you already have a financial literacy lesson that you're looking to supplement with tax information, we also have materials for that as well. So one of the best materials that we have, whether it be for your students or for yourself, would be our glossary. We have an extensive glossary of tax terms. Some of them were dropped in the chat earlier. If you were checking it out, you saw a marginal tax rate, you saw wealth tax. We have things like that, and we have more coming out all the time as well. We do try to keep that as up to date as possible, not only with current tax policy, but with other economic terms that might be of interest. So we'll be adding things like budget and deficit and surplus as well, in addition to tax brackets, progressive tax, corporate income tax. So here on the screen, you see an example of what the glossary looks like. This is just a bit. They do tend to be shorter, so they're perfect to share with students and hopefully have them engage with the entire content. Also, we have the primers. There was an example of one a few slides ago, just the front page. They usually go from about 3 to 7 pages. They're perfect for independent reading in the classroom or to send home as a take-home material for students to learn more or as a homework assignment to prep for an upcoming lesson. We also include videos, which I just went through with you about the explainer videos. Again, we do release those periodically, and we release for a year. We have case studies. I will say that these are more so crafted for a college classroom. That's coming from not my high school history teaching background, but from the policy background. But I think it would still be perfect to utilize in the classroom as a supplemental material. That just takes a topic based on taxation, like how can we structure a good corporate income tax at the state level? What does that look like? And it takes out really any bias that we could include in the material, gives your students the basic information that they need to spawn a discussion in the classroom. So again, that could be a perfect use just depending on which grade level you're teaching and utilizing this for. Finally, we have the deduction podcast. This is really for further learning for any of your students. If they're interested in a take-home material, if you think it would be a more engaging way for them to learn about cryptocurrency taxes or carbon taxes or other really relevant tax related topics, again, building those building blocks where they might be able to meet the content, the deduction podcast is perfect for that. We have a minimum of 2 episodes that come out per month. Sometimes they do come out weekly. Hopefully that'll be a more frequent production schedule in the future, but right now we just produce them as fast as we can to keep up with relevant tax topics. This is kind of what the website landing page will look like when you go. It's a little confusing based on what I just spoke about, so I wanted to give you kind of like a little tour of what it would look like. If you're looking for most of the materials that would be useful for the classroom, that's located under Tax Policy 101. So there's your primers, videos, lesson plans, and case studies. If you want to access the glossary, that is located at the top of the page on any portion of the TaxEDU platform that you are operating on, but it's also located under Tax Basics, where you can also find the principles of sound tax policy with examples. If you want classroom examples for this is how we could craft sound tax policy versus maybe what's not such good policy, that's located there as well. Legislative courses might be a little bit out of your purview, but I encourage you to check them out if you're interested. They're also free to use and download. And then finally, the podcast is located under its own tab as well. And I know I kind of ran through it all really fast. Again, I didn't want to, hold you up too much longer after such a good tax discussion and panel earlier, but We're chock full of resources. We're always releasing more, and we're always happy to hear from educators about how they could be better crafted or what additional content would be useful for your classroom. So you can stay up to date with the resources or contact me directly for resource ideas on Twitter at TaxEDU with an underscore, or you can subscribe to our monthly newsletter. Anytime we release new content, especially when we release a new video, that comes through the newsletter. So if you really want to make sure that you get those items in your inbox, keep up to date with this for your students, that might be the best way to engage with the content. And I'll go ahead and stop sharing my screen at this point, because that's pretty much the platform at this point in time.
So Zoe, a couple of questions that have come in the chat, just to send them your way, because I don't know if you were able to see them while you had your screen up. One question that came in is around whether or not there's any content around tax shelters and tax havens. Is that something that is covered in the TaxEDU resources or more broadly with Tax Foundation?
Currently, it's not covered in the TaxEDU resources. However, I would recommend, if that's something you're interested in focusing on, going to the broader Tax Foundation website, searching tax haven or tax shelter, looking through the articles that come up, and along the side and at the bottom, there will be related TaxEDU links located on the webpage as well as in the text as well. So you can dive deeper into things that are close to it. But the higher level material is available on Tax Foundation.
Excellent. Similarly, there was a lot of conversation about, continuing from earlier in the session, around Social Security. Are there resources in particular to help teachers talk a little bit with their students about Social Security or other programs like Medicare and Medicaid, and the way in which tax policy shapes those programs?
Again, I think that would be more on the higher level, just because TaxEDU is tax basics at this point, and we're still building up from our own building blocks. I would say as that comes out as a material, it would be sent out. But I would look on the Tax Foundation's broader website, and then again through the glossary. If that's something that you want to start really base level with, I would check out TaxEDU's glossary and just present your students with that term that is presented in, the most basic language that we can for them to digest.
So thank you so much. The last question that came up in the chat, and I think I know what the answer is already. Will we be able to share the slide deck and the presentation that you had with the educators after the conversation?
Of course. Any materials that were used in this session or that are located on TaxEDU's website are always open for educators to use. That's the whole reason that we exist.
Excellent. Well, Zoe, thank you so much for the conversation. Any final words that you want to share with the group about TaxEDU? And also, I should put in a plug. We're very excited that Zoe is going to be joining us at Sphere Summit this summer. So for those of you who are going to be joining us in person in Washington, D.C., and well, much too soon for my planning purposes, but very excited to see all of you. Zoe is going to be there sharing some more of the resources from TaxEDU and Tax Foundation. So we're very excited about that. But Zoe, any final words or additional resources that you want to put out there for the teachers?
Just again, thank you so much for taking time out of your personal schedule to participate in this. It's really nice to see so many of you join. And if you do come to the summit, which I hope to see some of you, we will have our hard copy material, our tax booklet. I call it like a pocket constitution for taxes. So if you really want to, give your students a hard copy material that they can take with them and dive in, there's QR codes in it. It's very user friendly, and I would love to share that with some of you and hope to meet you in person.
Wonderful. Zoe, thank you so much for joining us tonight. It was fantastic. Really appreciated the opportunity to hear from you, your colleague Alex, from Nico as well, and the chance to learn more about how educators can start to bring these resources to their students. Really wonderfully done. Thank you so much. I'd love to say to all of you educators, thank you again so much, like Zoe mentioned, for joining us tonight. It's been a fantastic conversation. We've appreciated all of your questions and comments in the chat. For those of you who are done with the school year already, congratulations. Take a deep breath, enjoy it. For those of you who are almost at the finish line, good luck. I hope you make it over the hurdle for the rest of the way there and enjoy the rest of your semester and hopefully a well-earned break. Let me conclude by saying we will be sending out the recording of this video once we've had a chance to clean it up and get it ready on our website, as well as certificates of attendance for those of you who have been here. And we'll be sure to pass along all of the links, resources, and materials to all of you very soon. Thank you all so much. Really appreciate it. Have a wonderful evening.